Hey, what's up, stock compounders? Brad here. So, a few days ago on Twitter, I saw Norbert Lou. Okay, no image, just kind of an anonymous looking Norbert Lou posted a link to a Ted Weschler interview. Now, I've never heard a Ted Weschler interview. Okay, I don't know that Ted Weschler has really ever done an interview, at least since he's been managing money for Berkshire Hathaway for 11 years or so. This was a fantastic interview. Okay, it was Norbert Lou's first ever tweet. Okay, and it's got more likes, I think, than any tweet I've ever put out. Okay, but it did deserve this many likes. It was that good of an interview. So in this video, I'm going to kind of pick some things out that really stuck out to me from this interview. And of course, in the description, I will link to this actual podcast episode / interview. Highly recommend everyone listen to this. And this is what it looks like on Spotify. So Ted Weschler right away gets into these lunches that he had with Warren Buffett. Okay, so I think it's probably 2010. He thinks, well, maybe I should bid on this lunch with Warren Buffett. Warren Buffett has been Ted Weschler's investment hero, okay, since I think the 1970s. So, 3 or 4 decades at this point. And so he thinks, well, I kind of want to bid on this lunch, but first I want to check out Glide Foundation, right? Because if I'm going to win this lunch, all that money is going to go to the Glide Foundation. It turned out Ted had a meeting in San Francisco for a trust, okay, for a trust that he was part of. So he decided to spend the afternoon after, doing the trust meeting with the Glide Foundation to see if it was an organization he really wanted to support. Now, I got to tell you, I doubt anyone who's ever bid on a lunch with Warren Buffett have really looked into the Glide Foundation. Okay, they were probably not at all focused on where that money was going to go, much more focused on the actual lunch with Warren Buffett. So that kind of stood out to me. So he ends up winning the bid for this lunch on the same day that he meets with the Glide Foundation. Okay, I really liked it. Put a bid on the lunch, won. A few days later, he gets a call in his office from Warren Buffett. It's like a Tuesday morning. Wow, this is incredible. I'm talking to my hero. And Warren said, so when do you want to do this? When do you want to do this lunch? And Ted's like, well, of course, it have to depend on your schedule. When are you available? And Warren says, well, I'm available tomorrow. I'm available the next day. I'm available the day after that or the day after that. And, Buffett has spoken before about how he really likes to keep an open calendar. Okay, it's very important to Buffett to protect his time so that, he's able to do exactly what he wants to do each day. All of the reading that he does and talking to other people that he's close to about potential investments. So, it really demonstrates how open of a calendar Warren Buffett maintains. It turned out to be a dinner. Okay, he went to Omaha. Ted went to Omaha, met Warren in the office. They went out to dinner for 3 hours. Now, the next year, Ted bid again on this lunch. Okay, for $1 more than he had won it the last year. And he won. He won again. And this time he had a little bit more time to prepare. Okay, so he had like 3 pages of questions to ask Warren Buffett. Now, towards the end of the dinner, right, in this second meeting, he's looking through his questions on his notepad, and Warren Buffett says to him, he says, I think you'd be a pretty good fit out here. Do you have any interest in working for Berkshire? And that just about floored Ted. That just totally came out of left field. And at first it's like, this isn't going to work, right? I've got this life in Virginia. My kids are in school. I don't want to move the family. And he just thought it's not going to work. And so he wrote Buffett this letter saying, it's not going to work for all these reasons. Buffett gets back to him maybe an hour later and says, Ted, you could manage money from the moon for all I care. Okay? You don't have to move here to Omaha. And so Ted was like, okay, let's do it. He had been running Peninsula Capital for about 12 years now. He was ready to scrape the plate clean and start something new. So he took the job, right? And I actually have the last letter that Ted Weschler sent to his investors, kind of saying, hey, we're going to close up shop here at Peninsula Capital because I'm going to start this thing with Berkshire Hathaway. And I'll link to that in the video description as well. If you guys want to take a look at that last letter, it's very good. It kind of highlights a lot of Ted Weschler's framework for investing, much of which he covered in this podcast episode. So he went back in time after kind of rehashing these lunches with Buffett, and this stuck out to me. He was working for a firm called Quad C. Okay, Quad C was structured to invest in control companies, right? Buy the whole company, meaning they'd be making the operational decisions. Now that wasn't Ted's preference, to buy whole companies and then have to run them. Ted's preference was to invest in publicly traded securities. Now there was a 6-year period during these Quad C days. He says, in the 6 years, I made exactly 20 investments. Okay, he also brought up the concept of a punch card that he first heard from Warren Buffett, where, if you have a punch card with 20 punches, okay, and your whole investing career, you can only make 20 investments. So each investment you make, you got to punch one of the holes. Most investors would do much better to take that approach because you'd think long and hard about each investment. Now, it just so happens Ted Weschler made 20 investments in public companies during this time at Quad C. And he said 19 of the 20 worked out really well. Okay, so that really jumped out at me. 19 of 20. Okay, that's like knocking it out of the park with 95% of his investments. Who has a batting average that high? I can't remember if it's Peter Lynch or Templeton, maybe even Buffett, said something like, if the best investors are going to be right only 2 out of 3 times. Okay, so maybe 66, 67% batting average. To have 19 out of 20 work out really well, that's just crazy. Next page. He says, so this is Ted's kind of framework for investing. If I could take the private equity mindset where you're buying the business and you expect to own it for 5 to 10 years, and do that with publicly traded securities where I'd buy, say, 3 to 4% of a business and have a very long-term view, I thought that would work, right? That's really what his framework going into Peninsula Capital Advisors. And it sounds like he has the same framework today at Berkshire Hathaway. Runs a lot more money at Berkshire Hathaway, so he has a much smaller pool of investments to choose from because of that. We'll get a little bit more into that. But the framework sounds like it hasn't changed much over time. He says there's far more people trading than buying a piece of a business and holding it for the long term. Right, so there's the opportunity. And I just was listening to an interview with John Huber today, Sabre Capital Management, and he was saying the same thing. The thing that differentiates him, right, the competitive advantage that John has, that Ted has, is this ability to look at investments through this 5 to 10 year time horizon, as opposed to a much shorter term time horizon that most of the market participants are taking. I mean, Buffett just pointed it out. He's never seen anything like this. I think he was talking about Chevron. The position he was able to build in Chevron over just like 3 or 4 weeks in February and March, he's never seen anything like how quickly he was able to build a position, because there's so many people in the market treating these things as short-term speculative pieces of paper, essentially. Ted goes on to say, one of the great mistakes of investing is that people end up reading the same things. Okay? The only way you're going to have success in the stock market is if you have a variant perception. If your perception of a business is somehow different than the market's view. He says, if I can come up with one decent investment idea a year, boy, that's great. Okay, one a year. Incredibly different approach here than most fund managers. He says it's a game of connect the dots, right? You want a different perception about where the company will be in 5 years than the market's perception. Of course, the market isn't looking at where the business is going to be in 5 years. Okay? It's looking at where the business is going to be next quarter. So even just having that difference of trying to look at, okay, where is this business going to be in 5-10 years from now? It's a totally different approach. In terms of variant perception, he says, I want to be reading enough weird stuff that nobody else is reading the same stuff as I am. I read Furniture Today and Uranium Weekly. Okay? Probably not a lot of people that subscribe to both of those. So different inputs in terms of what Ted is reading gives him kind of different insights potentially in terms of investment opportunities. Okay, last page. The investments at Berkshire are different because it's a much bigger pool of capital. So this is where we're getting into, how much capital you're running dictates which opportunities you can look at. Peninsula Capital was $2 billion at its largest. Okay, that was the assets under management, $2 billion. So, if you're putting money into 10 different ideas with $2 billion assets under management, that's $200 million each. Okay, so if I want to make a $200 million bet on a company and I don't want to own more than 10% of the company, because Ted says once you go over 10%, you have additional filing requirements. Every trade must be publicly declared within 72 hours. It's just a hassle. So $200 million, at a minimum, you want to invest into a company. You've got to find companies that are $2 billion or larger in order to make less than a 10% bet at that level. So, I looked it up on Ticker Terminal. In the U.S., there are 2,139 public companies over $2 billion in market cap. Okay, remember that number, 2,139. Now at Berkshire Hathaway, Ted needs to find ideas where he can deploy at least $1 billion into an investment idea. Okay, so that's a 10 billion plus market cap if we want to have no more than 10% ownership. That cuts out a big chunk of the market. So if you look at companies in the US that are over 10 billion publicly traded, that narrows it down to 774 companies. Okay, so 2,100 versus around 800. It's a dramatic reduction in terms of the pool that Ted can fish in, or the pond that Ted can fish in at Berkshire. Asked about what he reads, right? Because reading, it sounds like Buffett mentioned to someone that Ted Weschler is the only person Buffett knows that reads as much as he does. So what does Ted read? The vast majority of stuff I read are periodicals. He's actually right now, as of the time of this podcast, reading $1 Trillion Triage. Okay, fascinating about how, in March 2020, what actions the Fed took to kind of keep the economy afloat. I guess it's a fascinating read. It's definitely on my reading list now. Let's see. Inflation. He's asked, what's something you think a lot about these days? Inflation is something I think a lot about, but don't have any influence over. Right? There's nothing he can do about inflation. But certainly he's trying to figure out how does the likely trajectory of inflation moving forward affect companies that Ted is investing in and is thinking about investing in. How long is it going to last? How is it going to impact these businesses? Ted says, I always feel positive. Okay, it's a system that works. Talking about capitalism in the U.S. We've got the right incentives in the United States in this system of capitalism. And then kind of, just odds and ends towards the end of the podcast here. I've missed one day of running in the last 38 years. Okay, so running is something Ted takes very seriously. He does it first thing in the morning. It helps him wake up. And, in the podcast, he talked about how if he's reading something and he's having a hard time kind of conceptualizing something that he's reading or thinking about in an investment, he'll kind of bookmark it in his mind and think more about it as he's running the next morning. I guess that all that blood flow, right, helps him process things at a higher level. And then this is a great one to leave with. If you're intellectually curious, there's nothing better than investing, right? There's the only constant in this game is change. There's so many different factors that come into the realm of investing. Nothing is certain, right? It's a probabilistic game. And the more information we have, the more we're able to see the world as it actually is through proper interpretation of all of that information. The better we're going to be able to see what's coming and the better we're going to do as investors. So it's this constantly evolving, changing game that is just endlessly fascinating for Ted. So this was just an amazing interview. I hope Ted Weschler does many more like this. I'm not counting on it, but hopefully, maybe he's entering some phase of his life where he's feeling compelled to kind of share his wisdom with the masses, right? Much like Warren Buffett has done for much of his life. So hopefully that's coming. But either way, this was a fantastic gift to the value investing community. Definitely check out this episode again if you haven't listened to it already. And with that, I will leave you all. Thanks for watching. See you in the next one. Take care.